Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, July 23rd, 2025. It's 9:48 a.m. Eastern Time, so we're only just getting started in the trading day here. And I wanted to do just a brief update on both QQQ and the semis, and really probably just hit on the mag 8, 9, 10, whatever you want to call them, and keep it relatively brief. So we're kind of keeping this related to the equity markets. The semis move in line. The Nasdaq 100 is mostly tech stocks, about theoretically roughly half or more. Semis are, I kind of call it the canary in the coal mine for the tech sector. Obviously, a subsector of tech. Tech is also the largest component of the S&P 500. Tech is everything. If you know the stock market, you know that. And right now, AI is the whole main driver of the stock market and technology stocks. So I'm going to go over that real quick, but just a reminder that tonight you have two of the big mag 8, 9, 10, whatever you want to call them, companies, Alphabet and Tesla, both reporting. They both have the potential. They both have a significant weighting. I think Google's a little more probably significant as far as the market goes. Tesla, they're going to have their, Bitcoin, we know, is that are coming off, very near all-time highs, and Tesla has a good stake in Bitcoin that may affect earnings there. But again, we'll see what the street does to either of those stocks. I'll go over those in a minute. Let me do this. Let me start out with that QQQ short-term trading strategy that I shared with you. I was going to do a video yesterday, and the market was getting close to being closed. I didn't think I'd get out. I'm just going to share my thoughts on that. And then we'll loop back to the semis, because again, the semis are everything. I told you we had the recent sell signal. SOXX is starting to crack support. Remember yesterday, here it is. I gave you more of a zone right there. So we haven't fully taken out the zone, but it is follow through to the downside following this recent bearish rising wedge breakdown and back test. Again, that was all covered in the video yesterday. But let me get to QQQ real quick, because this is important. I should have included this in the video that I gave you the other day on that short-term trading strategy. This strategy works great in a relatively low volatility range. And I can only scroll back as far as I did in that last video I did day before yesterday and tell you the buy and sell signal is very, very highly effective trading strategy. And we did hit our target. We shorted it when I did the video for you. We're right here. So we shorted that. You made your 1% pullback to my target of 560. And that's hit. And we're still there. We're right there again. It's technically not too late. Now, as far as reversing, that to me is a no-go. As I told you, the strategy has been very simple. You sell and or short, sell your longs and or enter a short on the rallies up to the 85 level. Remember, it's on my customized RSI. My level's not the default 30 and 70. And you buy down there and or cover. And again, you could have covered yesterday, and you would have made the whatever it was from the your 1%. It was almost exactly 1% to that 560 target I gave you. The total drop is about 1.24. So I'll get another effective one. Now, because the semis have broken down and I put on a sell signal, we have an official short trade out on those now. That increases the odds greatly, substantially, in my opinion, that the broad market's going to buckle soon and finally give us a true down date. So, downtrend. Therefore, this slow grind, you can see it. It looks like a upward escalator, staircase, upward EKG, and that's going to continue to some point. And then when the trend breaks, as I've talked about repeatedly recently, there's a potential for an accelerating, even waterfall type sell-off. You can use the word crash if you want. That's, it's going to take a heck of a catalyst to crash the market now. Usually it starts rolling over first. It's not going to crash today, tomorrow, next week. That maybe next week, big FANG earnings. I'm just talking about a big move down. We haven't seen a big, the good old fashioned 2-3% down days. Lately it's been, 1% up or down days. And all dips have been bought. Okay, so I think I've made myself clear there that buying the dips down to the 20 level to go long to try to gain a 1% plus bounce is not favorable at this point in time due to the reasons I just stated. Okay. All right, let's move on now. Let's go back to the semis. SOXX being the proxy that I'm using, covering that. Again, there's other semi ETFs. There's leveraged versions of this if you want to trade those. SOXS, if you put an S there, gives you the, what is it, 3-time leverage? Yeah, 3-time short. And XOXL is the 3-time long. And then you have XSD, just another company's variation of a semiconductor sector. Again, just, a lot of the same stocks, but not the same weightings, and some different holdings in there overall. That's what this one looks like. And, the charts are the same. See what I just did? I take my divergence, same thing I've been talking about QQ. The lines just get bigger. And stuff back here, we had a divergent high here, little drop. We had a divergent high there, a little bit bigger drop. And then finally, it was that third extension of the same divergences that gave us the 42% drop in the semis that we milked on the way down earlier this year. That one was good for about a 28% drop. And this one, you already have my targets, of course, on the SOXX. And then SMH is the other one. So I like to look at all of them. And they're all singing the same song right now. Again, this was a divergent high back there. So we've had in the semis in the last couple of years 1, 2, 3 major divergent highs, followed by so far 1, 2, and I believe soon to be 3 big corrections. So when I like an idea, I'm going to cover it more frequently, and obviously I like this one. And again, the takeaway, I can't press upon this far enough, important enough. The market is likely to follow just like it did back then, obviously. Okay, so let's go back to SOXX, and again, let me just cover the fact that here's the targets on this board right here. I already gave that to you yesterday. You already have that official trade idea. Just work off this board for a while. Nvidia bounced where I told you they would buy it yesterday in the video. I would have been very surprised if they didn't step in and backfill the gap. I mean, come on, this is Nvidia, crowd favorite. And so they did, but it's been so far a relatively muted bounce, and the fact they bought it where expected hasn't changed anything. The breakdown occurred. We had a solid red close. Remember, I was doing the video in the day, told you anything's possible. They could ramp this thing back up and potentially foil or not give you the breakdown on a closing basis, but that didn't happen. We did have the breakdown. So as I said during yesterday's video, break of yesterday's lows on just about all the semis, especially these, the big ones, and SOXX should do the trick and open the door. So here it is. For those of you who've been waiting for some, I keep talking about half decent sell signals, which we haven't had in a long time. This is the early stages of it. Next, we just need to see some of the big the majority of the Mag 8 do the same. And I'll go over those in just a second. So there it is, solid confirmed sell signal on Nvidia. Same thing on Broadcom. Told you can just take these targets from that last trade. We kept stops tight. We shorted there. I had a stop right here. So technically that was stopped out. Technically it's a new trade since the stop was exceeded. Broke down yesterday, closed below the trend line, follow through today. Looking good. So that's 2. Number 2, that is. I'm just going through all the components. Taiwan Semi, breakdown candle yesterday, still in a sell signal. Now look, guys, anything's possible. Maybe Google's selling what the market really wants to hear today and everything rallies because of it, and or Tesla and these guys. So if the majority, not 1 or 2, but the majority of these, especially these top holdings, get solidly back above the trend lines, guess what? That was just another whipsaw, i.e. false breakdown. There was a little whipsaw there, but see, that's the one I talk about. I like to see the redder the better. That's not one I would have shorted because it was only, you had to squint to see if you were below the trend line on that candle. We closed just a hair below it. And we didn't have comparable sell signals on the majority of the other big semis and or SOXX back then. ASML, done, reported earnings. This is what I think we'll start to see. There's that acceleration in selling, pretty powerful sell-off. It's now lost the 200-day moving averages, both the simple and exponential. AMD yet to break down, one to watch. Earnings coming up right here. There's earnings in, what is that, about August 5th. So another, less than 2 weeks right there. Texas Instruments, remember in the video I did 2 days ago, I played the game where I call them up or down after earnings, called this one down along with what was the other one reporting, NXPI. And again, it's, there's no guarantee to this stuff. It's probabilities. That's what I deal in, not possibilities, but probabilities. And we had a bearish rising wedge, which had already broken down before earnings. There it is. I believe that was earnings right there. I don't see the little... Usually put the little E on there. Either way, big move down right now to the 200s. So this one, for the first time, is testing the 200s. And if you are bull, I know there's a couple on the board. They make themselves very vocal. Particularly one. Here's what you want to buy. This is your, if you were, long or wanting to buy Texas Instrument right here, because the market's just going to keep going up this year. You now have a 15% drop. You can buy this thing 15% on sale at the 200-day moving averages. However, where I'm going is watch this, because they should, and they'll probably get some reflexive buying, maybe come back to that gap. But if and when, whether it's today, tomorrow, or a month from now, or 6 months from now, when the 200s are clearly lost, that's going to be bearish for Texas Instruments. So I just want to point out it's there. And with the majority of the stocks just starting to break down. Remember, this one already broke down. It was ahead of the pack. We had a sell signal there. Why didn't it go down too much? It was waiting for the rest of the pack. Any one semi, just like gold mining stocks, one breaks down, the rest aren't going to drop, and it's not going to go too far until the rest break down as well, the majority thereof, and GDX as well, the sector. So there's Texas Instruments, Qualcomm, breakdown, little kickback to the 200s. This breakdown, lost the 200s. Some of these stocks moved through it. Well, actually, it had just briefly popped this. This was a rejection off the 200s. Rejection. I'm talking the blue line right here. It's the 200 simple. Rejection. And right now, it's currently testing the 200. So, this, clearly, the further you get away from the 200s is bullish. However, if you get a rejection and then you take out this 151 support, that's going to be bearish. Applied materials just starting to crack right now, hence the reason for this video, but the day is still very young and you've got some big earnings on deck tonight. So again, what I said yesterday, not an all-in moment. I wish I could say it was, but certainly to me a starter, position in the semis yesterday, and maybe wait until tonight after the big ones report or tomorrow, see if we get some follow through. Again, everyone, I have to speak generically because everybody's different. Some people might be more aggressive traders, want to jump in heavy. Some might want to wait for a lot more evidence to short, and that's fine. But just keep in mind the way that the semis typically work, because they tend to move pretty fast. Once a top is in, like here's a good example right here. Back in 2024, we had a breakdown, a back test, a divergent high, and a bearish engulfing candle. There was and that was a back test, like I just said. So many reasons to short, and I believe it was highlighted back then to do so. Now let's just wait. Let's just say after that bearish engulfing was put in, you waited. Let me just put the crosshairs here. 10 calendar days, 8 trading sessions. Well, the semis were already down from that point about 15%. And most wouldn't want to short. And if you did, if you were what I call a Johnny come lately, you shorted right there and you immediately went underwater because they bounced 7%. You probably stopped out. So again, this is my trading style. I like to catch tops and bottoms. Yes, you get some cuts sometimes, but as long as you manage those top and bottom calls with appropriate stops, the profit potentials can be huge, because this is when Kramer and folks on CNBC are going to tell you to sell the semis right here. When I'm usually telling you to sell them there or sell them here, and then I'm covering here when they're saying, or down there I'm starting to cover shortly after the majority of pundits on TV turn bearish and tell you all the reasons why the semis are falling and going to continue to fall. And when they're telling you here all the reasons why they're going to continue to go up in 2025 and beyond. All right, so either way, right or wrong, I'm telling you what I see in the charts. That's it. It's all technical analysis. The fundamentals will ultimately follow, and meaning the headlines will be rewritten or retrofitted to tell you why, long after they start dropping, why they dropped and why things changed and why a lot of the analysts didn't see it coming. Lam Research, nice breakdown backtest of the wedge, Micron. All right, and then KLAC, and then the other one I wanted to what was the one I mentioned? NXPI was the one that reported the other day, right? And that's still down. Breakdown backtest hasn't gone down a lot yet because it's flirting with the 200-day moving averages. It's just above them, but clearly again, still calling for more downside after earnings. And then let's get to the Mag 8, 10, whatever. All right, so Nvidia, like I said, doesn't report all the way until the end of August. So Nvidia is just going to have to go trade off what people think it's going to report. And all I can tell you definitively, again, you want experts on fundamental analysis on Nvidia, I'm not your guy. I don't spend a lot of time reading up on that. I on this one, it's the charts. Same reason we shorted it here. Same reason we covered it here. Went long. Last short didn't work out, was right here. I highlighted that short on the deep seek gap. And then what happened is we consolidated, had several weeks of trading on that level, and then we had a breakout candle and we moved up, and that's where any objective stop would have been. Now it is, as of yesterday, as highlighted, a sell signal with the next sell signal to come. In other words, maybe take it up to a full position if and when yesterday's lows are taken out, and that gap is the big old gap from right here, which again, yesterday's lows gets taken out. Alrighty, Microsoft breakdown yesterday, sell signal. Finally, there's that price channel. It's been building forever and a day, very long in the tooth. Negative divergence at the recent high. You can see down here. Breakdown yesterday, pretty clear. Solid close below and follow through today. Again, Alphabet and Tesla could foil these breakdowns. So to me, again, it's not an all-in moment, but it is a starter short position moment. If you trade in fear or always hold off, there's always a headline, and during the earnings season, there's always a next big earnings. Next week, you're going to have the rest of the big, Apple, Amazon, Meta, all the other ones come next week. So, if you want to wait, you certainly can do that. If I'm right and these breakdowns stick and they're not false breakdowns, the problem with that is QQQ and a lot of these guys may be down here if the market starts to sell in anticipation of those stocks selling off after earnings. So just keep that in mind, or it goes the other way. But again, if you're going to trade, you have to have, I might not be, and I'll tell you, I'm not the most disciplined trader. I will second guess bullish and bearish chart setups, breakouts. Some breakouts I'll pass on because I suspect they'll fail, or I'm highly confident they'll fail. I might even go the other way on them. Sometimes I go long on a bearish breakdown because I expect it to be a whipsaw. And sometimes I'll short a bullish breakout because I expect it to fail, or quite often, more often, I'll just wait till the failure happens. So again, I am not a purely mechanical trader. A lot of instinct and gut feel goes into it, but I can tell you if you are, and you have to sometimes pick your reasoning for entering a trade. And if it's based on technicals, don't second guess your buy and sell positions, right? That's it. That's a sell signal. All right, so I just went over Nvidia, check. Biggest one, Microsoft right here, check. 2 checks on the 2 biggest components of the Nasdaq 100. And yeah, with a asterisk in there because big earnings are coming up and can certainly foil these. Apple, peaked back in 2024. We're better than halfway through 2025. It's currently in an uptrend. It's trying to play a game of catch up, but guess what it's doing as well? Testing the 200-day exponential moving average. If it can pop that, then it has its 200 simple. And again, I've covered this many times in the past. These are really nice levels that tend to define bullish trends. When you're above, you want to buy pullbacks in those bullish trends. Do it till it works, till it stops working. There was a breakdown right there. Tried to take it back, even did for about a week, but then that recovery failed. Then they kept shorting the rallies back to the 200s. And so that was a bear trend. Nice correction. Then they took them back right here, back tested successfully, and then that was it. You keep buying the pullbacks until they're lost. They were lost right here again, and you had a drop of about 12%, so certainly worth trading or getting out of your longs. And then you took them back right here at the crosshairs, and you rallied from there about 43%. And what happened? Took them out here, and we've been back testing the 200 exponential. And if we pop that, you still have the 200 simple just above. Sometimes it's one, sometimes the other. Generally, the tech stocks like the exponential better, but I like them. Obviously, I have them up there, both of them, because some traders like the 200 exponential, some like the simple and trade off them. Therefore, I'm going to watch them both and factor both of those in for that very reason. All right. The line's back on. Amazon next week, reporting next week, broke down recently. It's been back testing. This is primary uptrend line right here. Breakdown, back test, divergence right there. This purple line is a long-term uptrend line. It's also been back testing that. So it's in a what I call clearly a near-term bullish uptrend. Although let's not forget the stock peaked back here in the beginning of 2025 and has yet to take that high. However, the near-term current trend is bullish, yet it is in what I call a bearish technical posture. So if somebody asks me, what's your outlook on Amazon? It's bearish. And if you didn't understand that's outlook, where it's going to go forward, if you can go back in time, let me know. If you've got a brokerage platform that'll let you, date your trade back to here or here, great. It does no good to have someone tell you a stock is in an up or downtrend. You can look at the chart, clearly do that. What's important is where it goes from here. And so again, this is a bearish technical posture, but without any sell signals. And again, it's only going to go so far, even if Alphabet disappoints or blows the cover off the ball tonight. Remember, Amazon's going to report next week. I believe it's Thursday, Wednesday or Thursday. I think sometime, I already went over that, sometime next week. So, it and the market aren't going to go too far. You're just probably going to see volatility start to expand, little up and down swings between now and then. So take that into account. Another tip I'll give you is I tend to widen stops on positions heading into earnings, especially those that are highly correlated tech stocks right now. Because of earnings, you're going to get those swings, those knee-jerk reactions, even in the regular session. And I also, as I've shared with you in the past, and I know at least one subscriber said they used it to their advantage, my strategy, especially during earnings season, I always like to use OCO orders, covered that many times. You can go in the FAQ page and find out what they are. One cancels the other or one cancels another. Some brokers call them OCA. And simple. Let's just say, for kicks and giggles, I was shorting Amazon right now. I'm going to have two orders. I'm going to have a stop loss up here on a short, and I'm going to have my price target, or my first or preferred. Sometimes I take partial positions. I'll usually reverse. Let's just say, in this case, here's what I'm going to do. I'm going to have a stop right here at 240, and I'm going to target this support level right here, 194.75. So in OCO, I have a stop loss order, good to cancel, but the stop is not set or to allow to be triggered outside of regular trading hours. That's just a toggle on interactive brokers. Some brokers allow you to do that as well. I don't want my shares taken. My goal is to not be stopped out. And in a earnings season, you're going to get these spikes, and especially in the after-hours session, and they can take your shares. However, I want to use that volatility, which again, those spikes are often faded, the big spikes. I want to use it to my advantage. So I allow my profit-taking orders, in this case, a buy to cover, which when you short something, that's your closing order, buy to cover, limit order at, if the support's 194.75, I'm going to be covering right here, a little bit above it. And I will check that, allow it to be filled in after hours in case there's a big spike down after hours. It might have been zigging down by then, and boom. So I want to get filled, and I don't want to get stopped out. But then the next day, if it opens up and after the after hours, frenzy or order imbalances are what they are. If it goes up to my stop, great. Let them take it, and that's it. Move on to the next one. All right, Alphabet. Oh, nice. Covered it the other day. Told you had some resistance right here. I'd like to see it go to that, and that's it. Perfect rejection off my 194 resistance level so far today. Nothing, nothing to get excited about, but got rejected off that. That's right about right there, about 192. Big old gap right there, top of that big old gap. And this one reports tonight. This is the uptrend line right in here, current uptrend line, and these are your targets. Yeah, whatever. Upside, you have a primary longer-term uptrend line right here. I'm not crazy about this one. I will call it down. Just go ahead and play that game, that call for, where it's going to go in earnings based on this. We have a slightly higher high on the PPO right there and RSI. Technically speaking, taking out the divergence, but I see this quite often. It's what I call an ADH, almost divergent high. Either way, you're at resistance, and there's that trend line there. Again, I wouldn't take this one into earnings long or short. I don't have a strong opinion, but my guess is, and again, not the immediate knee jerk at 4:30 today, but the lasting reaction, whether it pops up in after hours or tomorrow morning. But in the coming days to weeks, this one I see going down. And if it does so in a impulsive fashion, we have the potential to put in that head and shoulders pattern that I covered with you before. This is what it looks like on the weekly chart. Big divergence, been building for a long time. And again, it's not as if it hasn't worked. That first divergent high highlighted back here in 2022 led to this drop well into the double digits. Stock got cut in half roughly. That was right there. That was about a 45% drop. Ended with this divergence here on the RSI, gave you this rally. So this was just divergent high 1, 45% drop. Divergent high 2, another drop there, a little wedge break, sell signal. And it's all just an extension of this divergence that's been building now for the last couple of years on the weekly chart, setting the stage for a much bigger drop. Here's your primary secular bull market uptrend line. This is the current uptrend line right here. You have a breakdown and a back test of this trend line. And so you're at resistance. So this is that. When you see it, it looks a little cleaner on the weekly here, that head and shoulders potential. Again, I keep using the word potential because we do not have a right shoulder formed. If this one craps out after earnings, moves down, and if it does, it will almost certainly give us that spike in volume. You want to see the right shoulder form on above average volume and down to your neckline. Then you have a fully formed. So when you see these, sometimes you can take a shot at the right shoulder with a stop not too far above, because if you go too far above, you foil the pattern. You can't, right shoulder can't be bigger than the head. You could have a two-headed head and shoulders pattern. You could do something like that. That's a thing. Sometimes you have two right shoulders, two left shoulders, double heads. Either way, I'll follow up on it, guys. I don't have, like I said, a strong opinion, but I can tell you this. You may not want to hear it, but if it goes up and punches out, makes a marginal new high, again, marginal being the operative word, it will still be a divergent high. That's 100% guaranteed. Again, if it's marginal, anything 20% or higher, you could take the divergence out. All right, so so that's not going to change the technical posture or the longer term outlook. But like I said, this one, we don't have any sell signals or anything yet. First sell signal would come in a break of this trend line here. Second sell signal would come in a break. Well, you can see all my support levels. Each one's taken out. It's going to increase the odds you're going to go down to the next one, so forth and so on. Meta, just been building that big divergence. Again, a lot of these show best on the weekly chart. When you come out to the weekly, you can just see how big the divergence is. And that, helps to reaffirm, in my opinion, those longer term targets I have on the Nasdaq 100 that are still going to call for a 50% plus drop, give or take 50% drop in the Nasdaq. Because it's priced in just like it was right here. Same big divergence. That time Meta fell 76%. Was it random? No. Did I highlight the divergence back then? Yep, sure did. Were we short a good part of that? Yep. And so it's the same thing here. I see it. I don't see it any different in the chart. Broadcom, I already covered. Did I cover? No, maybe not Broadcom. Yeah, I already covered that. It was in the semis. Yep. Breakdown already. Tesla needs to take out this trend line. This one I'm not going to make a call on. We already put in a divergent high, It went down. It's in a near-term down. Well, not even. It's not clear. It's near-term sideways. So this one is a crapshoot to me. You can see the levels, and so I hope it goes down. I still have a starter short on the Qs, on NQ, the Nasdaq 100, and of course I've been building into a position in semis, SOXX. So yeah, I hope this goes down for the sake of bringing the text down, but we'll see. Netflix, here's a case of buy the rumor, sell the news, blowout quarter. Analysts were scratching their heads. Oh, maybe it was a Forex, foreign exchange, and the US dollar rate, blah, blah, blah. Why is it going down? Well, there was that divergent high breakdown. It's been moving lower. It's at that first 1179.50 support now, / target. If that breaks, next target's 103 and 1000. And that'll be the 200-day moving averages. And that'd be a good place to game a bounce if, major asterisks there, if you can make a case to bounce the Qs, Nasdaq 100, Microsoft, Nvidia, Apple, Amazon, Nvidia, or any thereof, the more the better, because that's going to be nice price support plus the 200-day moving averages. Every stock, even the most bullish stock in the world, is going to come and visit its key moving averages in an uptrend every so often. It's just the nature of how it works. And so what you do is, you like Netflix. If you liked it here, you got to love it on a pullback to the 200s. Now, I wouldn't get married to it there. I'd maybe game a bounce. Again, if the aforementioned conditions exist, i.e. the reason to cover, also go long in the Nasdaq or play a bounce there. But, these long-term divergences, there it is. Here's a monthly chart. I think I don't follow anyone else as far as technical analysis goes. Once a blue moon or turn on CNBC, and they'll have somebody like Carter Worthless or one of those come out on there and give their 2 cents. But I just don't see many cover these long-term charts, and that really helps formulate, where things are going in the coming years. But they just take a long time to play out, but they do work. This was, these are all, from a long time ago. This divergent high, 45% drop. This is Netflix. These are the cycles within a bull market. This is a secular bull market, but in there you're going to get these cyclical bear markets, and they're so profitable to trade. 45% drop off that divergent high, 77% drop off that divergent high. And here's our first and only the monthly chart, first and only divergent high since the beginning of 2022 when we had a 77% drop. Before that, it was 2018 and we had a 45% drop. So just to take her back to the trend line in the 200-day moving averages, which I just pointed out to you, that's a 22% drop. And yeah, that's probably where they buy it initially. So you see this, boom, boom. Then you break the trend line just like you did here. There was that initial reaction. I don't know if you can see it in the chart, but you had the sell signal there on the minor uptrend line break. Then you hit this more significant longer-term uptrend line. And remember, this is a monthly chart. I mean, every candle is 1 month of trading history. So for a few months, you traded on that and the 200, 40 period. I'm sorry, guys. I'm sorry. This is a weekly. I just said monthly. This is a weekly chart. I thought I'd toggle over, but that's fine too, because you can trade off the weekly. The 40 period are the same as a 200-day when you put them on a weekly chart. And so they bought them there. They bought the pullbacks to the trend line support in 200, but it was a very muted. I always say a reaction can occur in one of two fashions or a combination thereof. A reaction when you're falling down to support is a bounce. That's my golf ball analogy. Drop a golf ball onto a tile floor. It's going to bounce. Or a hacky sack. Drop a hacky sack. The reaction is going to be, it's going to stop right there. And that's sideways trading. That's the more bearish of the two. The buyers the sellers let off for a little bit, but the buyers weren't there. Not enough of them to bounce it. And that's the weaker of the two. So after a few months of trading on the 200s, boom, it lost them. And when it lost them, what did it do? Did it meander around? No, it was lights out for Netflix because it was very clear bearish technical event. So I'm talking weeks, maybe months ahead, but that's something to watch for. So if I don't follow up on Netflix again, just replicate this chart, use log scaling, put a trend line off the mid 2022 lows, and you're going to see it's going to come in nice with the 200-day / 40-week moving averages. And so if and when those go, I guarantee you the bobbleheads will be telling you to buy Netflix. It's the deal of the century. Is, you know, brand name. Everyone loves Netflix. 23% down. It's on sale. But if when it breaks those levels, it's going to go down to here. That'll be about a 37% drop off the highs. Then that'll eventually go, most likely go down here about 46%. At that point, market will be in more of a panic mode, and the bear market will be recognized by the masses. And but again, it's going to be, in my opinion, too late to short. You get so oversold. Yeah, I don't like shorting towards the end. That's when I start to cover up shorts and get ready to go long. All right, let's wrap it up here where I left it off. Look, so if you did happen to go long on that drop to the 20 level right here, you're still profitable, or it even. And that was the target I gave you right here in the video the other day. You got a little bounce out of it so far, not much. The thing to do, this may continue. This pattern may continue to work. Remember, the pattern was buy and cover at the levels hit of the 20 level, sell and or short at 85. And so if you did that, you're still okay. You just might consider a stop under those recent lows, because then something else may be going on here. And again, if they can rally up the semis today and hold the marker, maybe the semis still close down, but there's enough lift from the non-semi tech stocks, Microsoft, Apple, Amazon, Alphabet, Meta, Tesla. None of those are in the the SOXX. Then yeah, you could see the market hold up a little longer. But you guys have my thoughts, and most importantly, you have the levels to watch that will, like a break of the recent lows on the semis and the levels I just covered on the Mag 8 stocks. So let me wrap it up here, get the video out to you. And as always, if you have any questions, want a chart opinion on something, a trade update on anything I put out recently, or something else you're watching, just post it in the comment section and I'll try to get back to you as soon as possible. This has been Randy Finney with Right Side of the Chart. Have a great day.